Now, your money masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. We get the Dow right now down 45. NASDAQ off 11. S&Ps are off 6. We got gold flat. It's been up, down, and all around. Silver's off 9 cents. Platinum's off 20. Bonds up 26 ticks. And King Dollar's on the move.
Oh, baby.
And it's Happy Valentine's Day.
It is Happy Valentine's Day.
Beautiful thing.
Yes, yes.
No doubt. And when we talk about a love fest, folks, Steve and I are going Go Long America. We're coming to your city. We're coming to Denver next Tuesday. That's a week from today.
It is. Week from today. Yeah.
Denver's Tuesday, folks. Spokane is Wednesday. San Francisco is Thursday. And then a week from that Saturday, March 3rd, is going to be Boston. You can sign up on the web at TFNN, and please don't sign up if you can't make it. It is free. It's going to be dynamite, but we do have a full house, and it's going to be packed, no doubt.
Yes, yes.
Okay.
I love it.
And let's see if we get any volume going today, right? I mean, that's the bottom line. You had last Friday. You had the downdraft, no volume. We'll see.
A little bit more volume this morning.
We'll see whether we get it or not.
Yeah.
It's the Bulls have had the shot, the Bears have had the shot, and no one's taken the shot.
Yeah.
So we'll see where this goes. And the shot being, are they going to be able to press it, folks? That's the name of the game.
Yeah, yeah. It has been an interesting market, for sure, for a while.
Oh, big time. Big time. And I'm gonna press this right now quickly. So I lost.
All right.
On the demo deal yesterday, I didn't get the grand. I didn't get the $5,000. So let me see what we got here today. So I got we're at 1342, and I can do now. This is where this gets interesting. So the 1340s. So if I did the 1340s, so this is a binary bet, folks.
Okay.
And it would be saying that trade would be saying, okay, if it closes, in this case, because I'd be selling them. So if it closes, if I did 30 and I did it 61, this won't be as sweet, but the bottom line is that you don't have as much to go either. 61.00. So that would be risking 1175 to make, what's that, 1800? I can't see that far away.
To 1830, I think so.
Okay.
I think so.
So let me just see this. ESH2. Okay, so what I'm going to do here, we'll go on. I'm going to wait for a little bounce. See, so this is what you have. If we look at the futures here, this is what you have, folks. You have the first leg down, and it's a nice leg. No, look at this. It might not stop. In the future market, you get 41,000 contracts in the E-mini. What would be sweet is that if I could get a bounce in there or do it at, well, it's only a point up, but, well, it's 2 points up. It's 1341. I think it'll last. That's the bottom line. I'm going to pull the trigger here. This is gonna come out of nowhere. This is how these things work. Okay, so what do we get now? It's only 58. Okay, I know what I'll do then. We are at let's see, we're at 1342. And if I say, yeah, the 1340 is good enough because I'm just gonna have to basically.
Now in this case here, you have to pull the trigger right away, or could you set this up as an advanced buy order or sell order?
Oh yeah, no. I can set it up. I can set it up at a much larger deal. Yeah,
okay.
no doubt about that.
Okay.
No doubt.
So you're gonna take the bearish side. I'm gonna give you for our bulls in the audience.
Okay.
I'm gonna take the bullish side. Let's see what.
Oh, perfect. Okay.
Right? Okay.
Yeah. Well, I'll do both of them. I'll do both of them. One second. Okay. So you can. Okay. So I'm gonna do 59.50. Okay. Okay. So there you go. Bingo. That's it. Okay, so what do you want to do?
Okay, so what I would want to do is let me just do a couple quick things here real quick.
So when we're looking at this, folks, what you're looking at is that by 4:15, these numbers are saying will it close greater than 1337, greater than 1340, greater than 1343.
Okay, so I would want to enter the trade at 1337.
That's when you want to get in the trade?
That's what I would want to go along at 13.37.
And you're saying that it's going to be over 13.37.
Yeah.
Is that the trade you want? Okay.
Yeah, well, or if you tell me someplace higher, I can give you a...
no, that's good. We'll wait for it to get to 13.37.
Yeah.
It gets to 13.37, we'll put the trade on.
So in that case there, we need to, when you're trading this, you want to...
You don't have to, but I'm not cognizant enough yet to understand what the bid would be at that point.
Got it. Okay, cool.
So,
cool enough. Okay. Yeah. Well, what we'll do is I'll spend some time with it, too, just so that during the shows or what have you, we'll just take both sides of the trade.
Yeah.
That way we can show everybody that's out there if you're bullish, if you're bearish.
That is the key. There's no doubt about it.
That would make one big party out here.
Yeah. Listen, man. I mean, it's wild. There's no two ways about it.
Yeah. Because it's a great vehicle.
Well, what happens, folks, is this: you can come over to our website at TFNN. You're going to see the Nadex band. You can open a demo account and test drive right now. The thing that's cool is that you have dailies, but you also have weeklies.
Yeah.
And I've done the weeklies too, and the weeklies are really cool too. Because the weeklies you can do them tied in, and you're saying, okay, what's it going to trade? What's it going to close Friday 4:15? And you can close them out in between that. You do not have to wait. Like yesterday when I was on, it came in the money that quick. And if I did close half of them, well, I would have saved half my money.
Yeah. So, and what's cool about the weekly, I suppose, if you put some other tools together, let's say that you were following Basil's work, all right, and and you knew you were in like leg C or something like that, and you're waiting for the next leg to unfold. You might want to take a look at playing the weekly. If you were following his system or something like that. You know what I mean?
You can get C. So, the weeklies are it. Now, you're going to love this one. Here, watch this one. I'm going to do another one, 10 to 12. At 10 o'clock, well, let's do this one. Watch this. I've never did one of these. Okay, really? This gets better. Okay, so we are going to watch this one now. Okay, so I'm going to do 10 to 12 o'clock.
Okay.
So this has to be a close at 12 noon.
Okay.
And greater than 1348. Oh, I like that one. I'll take that one. I mean, no, 1342. So I'll sell that. Now watch, this is going to be a higher risk for sure.
Okay.
Because you get, look at, it's going to be a 50-50 deal. If I get, look at that. See, it just swapped. That's just... No, it's still, even at 50-50, I'm going to do it anyway. I'm risking 1,400. Yeah, no, I'm risking 1,400 to make 1,500. Yeah. Okay, so do you want one?
No. At 13.37, I'm all over it. I might take the 13.37.
Okay. Oh, there you go. Okay.
So we'll see.
We'll see where this goes.
Let's come out. We'll see if this market can cooperate.
Yeah.
Give us a little bit of everything.
We'll find out, man. We'll find out quickly. Let's go to John in Philly. Hey, John, what's going on?
Good morning, Tommy.
How you doing, man?
Very well, thank you.
Good.
Hey, can I share a personal market observation with you and ask you to comment?
Sure.
Great. As far as the broader U.S. stock market, I try to be agnostic, namely just look and see what's happening and not be a bull and not be a bear unless it's warranted. There's no disputing a massive, huge bull market is extending in certain stocks. Apple is most notable, the NDX 100 clearly. But everywhere I seem to turn the past couple of weeks, I hear proclamations of new bull markets, and the one thing I look at is the S&P and the two other broad U.S. stock market indices, the Russell 3000 and the Wilshire 5000. And coincidentally, those three, S&P and those two, the patterns are all identical. And not any one of those three has yet surpassed the May 2nd, 2011 highs. And I look at the bull market proclamations about the U.S. stocks, for generally speaking, and I say, to make that proclamation without any of those three indices going to, new highs over 2011 sounds like it's a huge, fly in the ointment. Please comment as
well. Yeah, I mean, what you're hearing, and this is, John makes a great point, folks. It's not even close to being a new bull market. I mean, what that is all about is that is about money managers bringing in money. I mean, they got to say it's a bull market. You bring in money. That's how you do it, man. I mean, technically, no, you're not at highs. So I don't know what, different people have different opinions of what a bull market is, but, when you hear a new bull market, well, it is absolutely technically not a new bull market, because it would have to do exactly what you just said, and it hasn't. And I would make the case that we've been in a bear market since 2000.
Right.
I mean, my logic case, that's what it is. I crack up every single time someone says that, you got a new bull market. I say, oh, really? Where is it? But,
yeah, funny.
We'll see where it shakes out. And I'm telling you, I can't wait. I think the more I'm thinking about this, I really think that we are at the end of the big bad bear that did start in 2000. And I can tell you, and this is on a fundamental basis. We're out with some friends last night.
Yeah.
And folks that have, that would normally be bullish, they're not.
Yes.
And it's like, oh my God, and I'm just talking about a fundamental basis that, the economy's going forward, this is happening, and, they don't see it. And I'm saying, man, what I see more than, just everywhere where we are, is that money's being spent, and it's being spent hugely. And this is not money that's borrowed.
Right.
Because you can't get it.
That's right.
So that aspect, that there's been bent-up demand, that people have been worried. They've held their cash. You can't blame them.
Right.
And you know what? That cash spigot is opening. And I suspect that cash spigot is opening. Now, if you want to hear something that's really, I think this is one of the fundamental reasons, too. Picture this for a second. The baby boomers, folks, are in a situation that, there's only so much more time baby boomers have, okay? And it's like, okay, what are you going to sit on all this cash? What are you, out of your mind? Every time I go to a funeral, I say, well hold it, man. I'm going to keep making deals. I want action, okay? I am not going to sit around.
There's nothing like a dose of reality.
Yeah.
For sure.
But it's a fact. And there's nothing, it's kind of weird. There's no doubt about that. I think but that's a fact, man. It's a fact in my household. I look around and I say to you, we're making another deal. I'm going to be,
Yeah.
It's like, okay, you'll sit on so much, make sure everything's all right, but the reality is that, hey, who's kidding who?
That's right.
Cooking, brother.
Thanks for the commentary.
Have a great one, man. Have a safe one. Steve Rhodes, Tom O'Brien, and you know what, folks? We got Kate Stalter in the house. Isn't that a beautiful thing? She's going to be live on Tiger TV, growling and prowling.
How about that?
We got the Tigress. You stay right there, folks. We're coming right back.
An NYSE Amex-listed company trading under the symbol XG is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story gold mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We got the Dow down 36, NASDAQ off 10, S&P's off 5. We get gold. Let's go look at gold. Gold has had a heck of a morning out here. You know, up, down, and all around. Oh, yeah. So 93,000 contracts. And right at this point, she's rejecting lower price.
Yeah.
And that 1716 is the number. And she got the 1713. So it's going to be wild watching how this shakes out. What I don't like is how she's having a hard time getting up to the higher end. But, you know, we'll see. These little dojis, we'll get Doji.
Rick's Doji?
He's going to be calling. Doji Man's going to be calling.
Doji. Okay,
Doji Man used to be BGO Man.
Oh, did he really?
Yeah, Beam of Gold.
I love it.
Beam of Gold, you know, I'm sure there's plenty of folks that have listened out there. Beam of Gold, that was one of the first gold stocks that we bought. And, you know, we bought it at 32 cents.
Oh, that's great.
And that was a takeout. That was a takeout at, I don't know, $4 or $5.
Yeah.
32 cents and 50 cents. Now, you know what's so amazing about the gold market in general is that actually stayed at 50 cents to about $1 for a couple years.
Okay.
It absolutely stayed there. And then it went, I forgot, Ken Ross bought it. That's who bought it. Ken Ross ended up buying it.
That's great. That's great. You're talking about gold. I went ahead and just switched over to the weekly chart just to take a look at the trend line.
Yes.
Coming all the way back from the lows from October of 2008. And look at also, what's actually cool about this trend line is look at how when it did come down in the month of December, how it came right down into that trend line and rejected it, you know, and it's continuing to move. So you talk about gold truly being, you know, John was calling about bull markets or what have you.
Yeah.
Okay. Well, I will tell you this is a bull. Here's a chart where this is a bullish chart.
Right.
Period.
Right.
End of story. Is it at all-time highs? Absolutely not. But, you know, it's 1724 versus being up at the
that's right. No.
The 18. You know, this is an absolute bull run on this weekly chart.
Right. And then look at that. So we'll put that up. Now turn around and put the S&P up.
Oh, yeah.
And I'll bring that back to...
Yeah, you've got a bullish leg in the bear market.
Oh, no. Watch. Yeah. It's not even that. Like, when you bring it back, it's not even that.
Yeah, right. Well, exactly. That's for sure.
It's been in a consolidation for 10 years.
Yeah.
No, oh my God, for 15 years.
I know.
15 years, folks.
I know.
But you know what? That's going to be coming to an end.
Yeah.
I'm going to put that, we have that one clip, the always bullish Tom O'Brien.
Oh, really?
That's a clip from the 90s.
Is it really?
Yeah.
Oh.
Yeah.
Yeah, we got to play that one.
Yeah, totally. Oh, man, I'm telling you.
Yeah.
Let's go take a look at some of the, we'll see whether they get any high volume, but the high volume equities from today as to see what we have happening. You have Bank of America down $22. 22 cents.
Okay, so they're out of business.
They're really doing good. You get Citigroup off $1. We got Avon Products up 51 cents. Goodyear Tires down $1. That's a big hit. First Solar, that's a dead cat bow. That's down $3, 10%.
Yeah.
Let's go to First Solar because what has happened, do you remember the last couple of days we brought up First Solar? First Solar was actually putting juice into the S&P.
Right, it was.
Into the NASDAQ.
That's right, yeah.
Now, you talk about fast. Look at this.
Yeah.
It goes from $50 to $38 in 3 days. This is going right back to the lows. It's going to go test out those lows. We'll see how it comes into it. That low, the high of the low is $33. The low is $30. You talk about dead cat bounces. Holy cow. J.P. Morgan Chase. J.P. Morgan. Let's go look at J.P. Morgan. So
now your buddy Dick Beauvais was on Kudlow last night.
Oh, was he?
Yeah.
Was he?
It was good coming from Tampa. Local boy, right?
That's right. Yeah, absolutely. A local boy that actually is from Medford, Mass. I like that. That's a beautiful thing. Now, watch this. This is getting... Oh, no, wrong one. Okay. J.P. Morgan. Let's see what she's got here. Yeah, she's backing off just with light volume, too. The financials are going to be the ones to watch today. Now, we're at 37.85. You got back inside the August 25th level, which is saying, okay, you're back inside the other range, not the smaller range, but in the range itself, which is the consolidation between 28 and 38.
Yeah.
But if we don't get an expansion in volume, man, this thing's not going to go anywhere.
No, and really, if you just simply take a look at the XLF, okay, because you're dealing with, in essence, the entire basket of financials, and when you watch where it broke out from February 2nd, to the day the jobs report came in on February 3rd.
Right.
The high of February 2nd is 1441. Has not been able to even get down there to close that gap. It's gotten down to a low today of 1444, so 3 pennies away from that.
Right.
But still hasn't been able to bust its way down there. And when you gapped up, you did it on 86 million shares. You made a high out there with 77 million shares. Only the first time you backed off on Friday were only 64 million shares.
I know.
It needed more juice, like you're saying. It does. J.P. Morgan's going to need more juice.
It does.
The financials overall are going to
now,
need more
on
juice.
the 10-minute, folks, this is where it's going to get, we get a bounce coming in the XLF, but on the 10-minute, it's saying we will be back to those lows again.
Yeah, the 1444.
So, yeah, and that 1444... no, but see, it didn't break that swing from the 10th on volume, lighter volume.
Yeah.
Stay there, folks. Steve Rhodes, Tom O'Brien. We're coming right back. Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We have the Dow right now down 20, NASDAQ down 9, S&P's off 4. And Go Long America, folks. So this is Steve and I scheduled. Next Tuesday, we're going to be in Denver, Colorado at the Marriott in the Tech Center from 6:30 to 9:30 p.m. Wednesday, we're going to be in Spokane at the Doubletree Hilton, Spokane City. That's 6:30 to 9:30 p.m. Thursday, we're going to be in San Francisco, 6:30 to 9:30. That's at the Intercontinental San Francisco. And then Boston is going to be March 3rd from 9 to 12 a.m. at the Boston Burlington Marriott.
I've never been to Spokane.
No, I haven't either. I can't wait. I can't wait, man.
Cool.
Oh, it's going to be huge, man. And, folks, the workshop is free. But please don't sign up if you can't come, because we know we're already tapped out, and we're going to double up the room this morning as soon as I get off on one of them.
Yeah.
But, bottom line is that there is only so much room. So
yeah, if you do sign up and you can't attend, just give the office a call.
Exactly.
Yeah,
that'd be great.
Yeah, just give us a call, send an email. That'll be great. That way we have everything all set.
Right. Hey, Bears, where are you out here, man? The Bears just don't have it. And the Bulls basically want to take this thing back up. This is pretty amazing, actually. So if we look at the SPY, it can't go anywhere. We had, that's actually all right, though. Here, this is what we actually did. No, it's going to be back down there. Okay, so the SPY, you opened up this morning, you gapped down slightly, 135. You got to 134.62, which is nothing, which is a joke. You hit there with, 5.8 million on the 10-minute. But now what you're doing... And you have, you're at 5 minutes into it. You're only at 2 million versus 5.8. Yeah, it won't do it. So now what you have is this. It's going to test it. We'll see what it can do with small ABC down.
Yeah.
But bottom line is that
so the ABC down that you'd be looking at here, would you go all the way up to the highs from yesterday? Would you go up to the at around 2:45 in the afternoon on the spot its high, or would you just be looking at the smaller ABC just off of today's 10 o'clock?
No, it's the larger one.
The larger
it's
one.
The larger.
Okay.
It's 135.52.
Okay.
Yeah. See, because what you have there is this. Now, this is I love it when they're set up like this.
Yeah.
At the 135.52, which was at 14.40 yesterday, folks.
Yeah.
That on a 10-minute had 2.4 million. That 2.4 million was going over 7 million, so it was a failure on price and volume.
Right.
But then this is the key. So when you have a test, whether it's highs or lows, that test was on dramatically lighter volume that failed. But then what you got is an acceleration with volume off the high, 7.8 million. And that's what you need. Because what that does is that confirms that, okay, it wants to go to lower.
Right.
As soon as you have 2.5 at the high, you come off that high, 7.9 comes out. That is a seller that's in the marketplace.
Yeah.
And it would just be the opposite if you're going up.
Yeah. And so if people are looking at my chart here, here's where my cursor's at is your high.
Yes.
As you're moving down, okay, so you're moving down, and then just simply come down to the volume, and you can see you're accelerating.
Exactly.
On the way up. Okay?
Right.
And then you can even take a look at today's action. You can see from here's where it's made its high.
That's right.
Okay. Now, as it has come down, the volume has been coming down just a bit, just on this leg right here.
Well. Not really. See that way you got it. No, I understand what you're saying, but now that accelerator there.
Yeah.
And then what you do is now you take that and then see how it broke that other swing point coming across.
Right. Yeah, that's right.
Okay,
that's
so
right.
It broke the swing, broke it on volume.
Yeah.
Then what you're looking at is the acceleration back up. And then all you're going to take...
Yeah, so the acceleration back up is on lighter volume.
Isn't it cool? No, look at it. So the acceleration on the way back up, folks, is going against that heavy volume on the way down.
Right. That's right. That's right.
So you're always looking at, okay, what are we going into?
Yeah.
What is it? Where's the supply and demand right here, right now? And you know where I got this, folks, okay? The supply and demand, of course, I got from selling Cokes and sandwiches in the 1970s. But what I realized is that dealing with Fidelity, MFS, and these large funds.
Yeah.
And, when I was first getting into technical analysis, people were all using average this and average that. And I knew these guys. I said, hold it, man. I don't want to know what they did 30 days ago. I want to know what they did right now.
Yeah.
That's what that is.
Yes.
That's what that's telling you, that a monster is either getting in or getting out. And then the information is, yesterday's gone, tomorrow's not here. What are you doing right now?
Yeah.
Well, right now, you have a seller and the S&Ps.
Yeah.
And it's a large seller.
Yeah. And when you're taking a look at a chart and you see both large seller and buyer come in with no wide price spread at that stage. At that stage, you don't know.
That's right.
Okay.
That's right.
You've got to wait and you watch what happens around that specific buy point.
That's right.
And what we're talking about, folks, is, I'll have on my screen, sometimes I'll just simply have, in fact, almost always on my screens, I'll have the SPYs, diamonds, Qs, and I'll have it maybe on a 1 minute or 2 minute chart just to be able to, because out of one of my eyes, and I've got 4 of them, I'm able to quickly see a spike.
Yes.
Just to I don't trade off of it or what have you, but just, as I'm multitasking, doing other things.
Oh, yeah.
And every now and then you'll see that big spike come in there. But it won't give you any type of indication until you see the future trades as to what's going on.
That's correct. As you go, there's more information that's released after the first signal.
Yeah.
And that information seems to be more consistent, which is really cool.
Yeah.
Because what happens, folks, is that, and you want the information to be so skewed, like this is skewed because you're 2.7 million versus 7.5 million.
Right.
That's skewed in a huge way. That's saying, hey, man, there's no buyers, man. There's a huge seller.
Yeah.
And let me tell you something. If you've ever seen with a huge seller, if you've been next to one, folks, let me tell you something. It's dangerous.
Yeah.
The buyer will be the same way. But they buy or sell 100,000 SPYs like nothing.
Right, exactly.
It's just absolutely crazy.
No,
buy me 100,000, sell me 100,000, buy me 100,000. It's like, oh my God.
It's beautiful.
It really is. But it's a mind blower, man. It's like, boom. And 100,000, by the way, folks, is not that much, but 100,000 is a huge amount of money. And when you're actually just seeing it, it does a different trip to your head.
Yeah. Because I've watched it, and in 1 minute I've seen, I think it was like a million diamonds, million diamond shares going. And even though we're in the office, it's easier sometimes for us to send text to each other. I'll send you a text, whale in the diamonds.
Right. Well, I know this one fund manager, and I really respect him. The guy is dynamite. But check this out. This is pretty wild. Now, this is a fundamental guy, and he trades just like, because I've been next to him many times.
Yeah,
But what's amazing, folks, his discipline is unbelievable, and it's so cool being there, right? Because he's not a technical guy. He's an absolutely fundamental guy. Yeah. But he'll go in and he'll say, I think it's going to break, right? Up or down, 100,000, 100,000, 100,000. And then if he's wrong, close it.
Okay.
I mean, I've never seen anything like this in my life. I mean, it's so cool. It is unbelievable because, and my point there, folks, is that if you have money management, okay, Steve and I would say that, hey, use what we're doing. But the fact of the matter is, if you have money management, there's a lot of ways to make money in this business.
Oh, no, absolutely.
And this guy makes money.
For sure.
But it's amazing watching him. It is absolutely amazing.
Yeah.
I've seen him do that 6 times in one day, be wrong 4 times, the other 2 times he's right. They come out at the end of the day making money.
Yeah.
It's like, okay, we're done. Let's go to lunch.
I love it. Just going fishing.
Yeah, well, what is amazing is that it's pretty cool. There's no doubt about it.
Yes.
So look at let's see. So now the key is we were just talking about how the SPY is set up right now. And the real key is going to be it's going to go after this low again, and the real question is going to be, can it get the 7 million shares? You get 6.7 to be exact. So it hit that high with 3. We're just into the bar. We're only 2 minutes into the bar, and it's going to go after it. Now, for bear, what you want to see, folks, is that you want to see it stop right before the 132.62 level on the way down.
Yeah.
Before the 10-minute, and then you want to see, boom.
Yeah.
Then it opens up right at that bar. You open up at that bar, then the bears are going to have a shot to basically, bring the next leg down, because this is nothing. This doesn't mean a thing. This is a
yes.
Absolutely. I think Rick from British Columbia is selling. Oh, he's probably buying. What's he doing? Hey, Rick, you paying your taxes yet?
How you guys doing this morning?
Good, man. What's happening?
You had a 5-day chart on the SPYs there.
Yes.
And I'm telling you, it targets that high up there of the year, which technically we talked about. It doesn't have a lot of volume up there, but technically on a weekly and a daily up there, 137 or on the SPYs, or I don't know I don't have the number on the SPX, but
on the SPYs, I think it's I get going back 9 days, and it's 135.45. Is that what you mean?
Well,
no, you're going way back. We brought this up yesterday. I know
back to May 6th, right? The week of May 6th? Yeah.
Well, I just see a perfect inverted head and shoulder to go there, but the volumes just aren't right. That low 3 days ago had volume that probably should get tested down there, so I don't know. It's a tough call. I was just curious, the Bradley model's got a little date on Thursday. Steve, have you been looking up at the stars lately, or has it been cloudy?
I'm always looking at the stars,
cloudy,
baby, but there's no stars this week to look at. You got to come back next week. In fact, Tuesday should be, when we are in Denver, that's going to be a great day.
Well,
I thought maybe the full moon was getting close. The cat was running around a little hard last night.
Oh, yeah, that's you got the new moon coming in next Tuesday, but you got a couple other things happening on Tuesday too.
And Tom, if you could go the Qs on a weekly, like we're going up even worse than the SPX. It looks to me,
that's because of Apple, right?
And I'm just curious. You're pretty good at finding a lot of these NDX stocks. Maybe you could just go over 3 or 4. When you have time, and just see where you think they might pull back, and if they're ready for the turn, or if they can actually go higher yet. You know what I'm saying?
I do. I don't see this market going higher. I see the same. It's what you have is this. Now, so what normally happens forget what normally happens. What's going to happen, okay? And this is where this gets really wild. Is that the bulls are complacent. They're sitting there saying, hey, this market's going higher every day. Well, the reality, folks, is that it hasn't gone anywhere. And when you see this thing come down, this market's going to take a month in one day. And that's nothing, by the way, okay? To come down a month in one day, listen to this number, folks. All it would have to come down is 50 S&P points.
Yeah.
That's a joke.
Yeah.
And that's my reality anyway.
Well, on a fundamental point of view, which we don't pay attention to too much, but paralleling what you just said, this Greece thing, is there something happening in the next day or 2 or 3? Or
there's something happening over there every day.
Oh, in Greece?
It's just a matter of floating the next rumor.
You know what's pretty cool is that the date in Greece, okay, drop dead date is March 20th.
Yeah.
March 20th also happens to be the highs and the lows of highs in 2000.
Okay.
Lows in 2009.
Okay.
Yeah.
Okay.
Okay.
Okay. Right. Okay.
It's January 14th, March 20th, March 10th. Those are big dates in the marketplace, and it's so wild because what they are is Angie's birthday, my father's birthday, and my son's birthday.
Great. That's
what
great.
are the odds of that?
That's great.
Like when this happened. I knew I was in the right business, and it's so weird, man. I mean, it really is crazy.
Yeah.
It blows my mind, actually. It's like.
Well, we just need some volume to set up an ABC down, and it just hasn't been happening. We know it's going to happen, but just when, who knows? So.
That's right. No doubt. That's a fact.
Yeah. Thanks, man.
That's a fact, Jack. Rick.
Take care, Rick.
Okay, so let's go look. So what do we got here? Yep, you still got nothing. Bottom line. Well, let's see. So you just back down. This is even on the 10 minutes. Just back down with lighter volume. Getting right into that. It didn't hit the lows yet. So when they don't hit the lows, folks, that means that you get another shot that it will hit the lows. So we'll see where it shakes and bakes.
Yeah. Just building cause.
Yeah, no doubt.
Building a little island right here.
Yeah, well, I
Big
know.
island,
I know what you can do.
Oh,
I know,
goodness.
and this is where, folks, you go from indice to indice, so you can look for the next clue. And there it is. So what you do have, you get the bonds. You're at 159,000 contracts already. Now that is getting way over yesterday. Yesterday only had 280.
Yeah.
So that's saying that you will have a shot to do over that, which it has to do, by the way, in order to basically, get up into the higher consolidation, which is that 146 area.
Yeah.
And the more I'm thinking about it, it's going to be amazing. It's like, I suspect, well, the Fed's saying we're going to be in a low interest rate environment in 2014.
Yeah.
It's going to be really tough to get out.
Like 2 years.
It's going to be longer than that. It's going to be longer than that. Because watch what happens. Is that who is going to fight? If the Fed's not going to fight the deal, the citizens aren't going to fight it.
Yeah.
Why would you fight it?
What do you fight what?
Saying, well, you got to raise rates.
Oh, okay. Yeah.
You see what I'm saying?
Yeah.
It's like there's not going to be people screaming out there saying you got to raise rates because the party with free money is
Well, the people though that have a fear of the markets or on fixed incomes.
Right.
Those people are going to be screaming for sure. Because it becomes very difficult.
That's right.
From a retirement standpoint,
That's
where
right.
you had a certain lifestyle.
That's right.
And you were counting on a certain amount of income to be spun off of that, because every time you start dipping into principal, and the older you are, every time you dip into principal, you start to get a little shiver.
That's
because
right.
that is
There's no doubt. It
doesn't matter what amount of capital you have. When you start dipping into principal, you know that you're headed in the wrong direction. Now, that's a little opposite of, hey, you can't take it with you kind of a thing.
No, but that's important. No. That's important.
The ability to take principals because you want to, because you can, because you know what you're generating off of your existing holdings. That's my take on it.
No, you're right.
Yeah.
But I have a cure for that.
I love it.
Yeah.
I love your cure, baby.
Steve Rhodes, Tom O'Brien, you stay right there, folks. You get the Dow down 40, Nasdaq up 13, S&P's off 6. We're going to bring it back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
That's right, folks. A beautiful thing. Kate Stalter is in studio today. She's going to be growling and prowling with you. That's a beautiful thing. Right now, we have the Dow off 42, Nasdaq's off 15, S&Ps are off 6, and there's a lot of red picking up here. Oh, it's Valentine's Day.
That's it?
Of course
that's
it's red.
Of course, that's
My
right.
God,
yeah,
what was I
that's
thinking?
right. How about
what was
that?
I thinking, man?
Got to have everything bundled in red.
Holy cow. I'm telling you, man.
That's good.
So let's go back to this baby here. What do we got? Okay, so we're going after it. We're talking about bisecting and dissecting it. That's what we're doing out here today, folks. So 134.62. You're at 68 right now. You're at 4 minutes. Okay, it's going to need a lot more juice, but it's going after it. So
yeah. Now the Qs, though, the Qs are going after a little swing point at 10:15, which had 621,000 shares.
Yeah.
That just finished. So would you and you closed? You just closed, or you gapped down below that? You came into with 411,000.
Yep. So you're doing. I'm on a 10. That's on a 10 minutes. She's going to blow it away.
Okay. Yeah. Change that to a 10.
Well, not necessarily. Yeah. No, she doesn't blow it. She just blew the price away.
That's right.
We'll see whether she can get the juice going inside it.
And so really next is headed down to the 10:50 yesterday.
Right.
10:50 in the afternoon.
And what does happen, folks, and this is where, we can teach you what the patterns are, we can teach you, swing points and all that, but you do have to see a few cycles. What does happen with a pullback, a larger pullback, it looks like it always comes out of nowhere, and it doesn't.
Yeah.
And what happens is that it's like someone just pulled the the bathtub.
Yeah,
Right.
And
you never do know when it's going to happen. You just all of a sudden everything just goes. Shoo. It's like, what just happened here?
Yeah.
And it would be cool to understand that. Okay, how do all, because you know that has to be large sellers,
right?
But it has to be simultaneously large sellers.
Yeah.
And what makes that click?
Yeah. It's a money management thing. I mean, like you were talking about it yesterday on the shows and so forth, and the reality is that we've had massive distribution.
Right.
You've either had distribution or accumulation. What do you think is the one that's going on?
Oh, it's distribution. Oh, it's a no-brainer.
Yeah. So you got to get out there, and distribute as much as you can at those higher prices.
Right.
And then when you've accomplished your mission, boom.
Yeah.
Let it loose.
There's no doubt. And what happens, and this is what's really cool about the aspect of, trading markets both ways. What happens, folks, is that if you have that mentality in place, well, then you're buying at lower price.
Yeah.
And, the reality I've seen through the years is that, one-way markets, meaning that folks that just go long, they don't buy at lower price. It just doesn't happen.
Right.
It just doesn't happen.
Well, unfortunately, and that's what we want folks to do is to truly understand these markets, that it's normal for markets to go up and down.
Right.
But there is both, you start getting stretched in one direction or the other. If you're short and you get stretched and you just keep riding that pony, you're going to be out of money.
Right.
You want to do that.
Right.
And just like on, to the downside, and so whether we are still in the bear market, not in the bear market, whatever it is, you got to have stops in place. You've got to have money management in place, and to be taken out of the trade and be ready to buy in at a lower price.
Yeah, no doubt.
I mean, that's what you should be doing.
No doubt. And bottom line is that on the pullback, folks, you want to keep your eye on these dry shippers, because don't bite yet. See, they got a little bit higher to go, but those dry shippers, that is going to be a new bull market.
Yeah.
It's had the 4 deals. It has accumulation.
Yeah.
It had markup. It had distribution. It had markdown. It's been building a base for 2.5 years.
Yeah.
You get action out there.
Yeah. Cool.
Steve Rhodes, Tom O'Brien, you stay right there, folks. Kate Stalter is in-house. She's going to be right here growling and prowling with you in the small cap roundup. Then we'll go into Chicago for the option hour with Victor Jones. Then out to California, Ken Shreve, and then back here 4 to 6.
Have a happy Valentine's Day, folks. See you tomorrow morning.
Happy Valentine's Day.
You bet.
Make it a great one, folks. Going to be right back. Oh, no, Kate's going to be right back.